very interesting numbers because, of course, we had earlier Japanese and Australian PMI numbers which showed a coronavirus impact, but obviously Eurozone, the numbers have ticked higher. One of the things that we're seeing here is past stimulus is helping boost domestic demand, so offsetting some of the weakness. I mean, we have picked up quite a lot of damage, if you like, from the coronavirus impact, certainly in terms of export orders in manufacturing, as well as in the service sector. Companies exposed to things like travel and tourism, they saw noticeable weaknesses. But there's a hint here that we've not seen the worst of it yet, really, and a key indicator to look at here is suppliers' delivery times. Now, these times have lengthened quite significantly. We've got more delays than at any time we've seen since December 2018 in the Eurozone. A lot of these are linked to the supply chain disruptions arising from the COVID-19 outbreak in Asia. Now, this is leading to a drop in inventories of inputs in firms. So at the moment, they're managing to produce, but the question is, can they get enough supplies to sustain that production in March and April? That's the big question, and we may yet not have seen the full impact here in the Eurozone.
Another perhaps signal to look at is the Eurozone flash manufacturing PMI future output index has also come in at 57.9. That is below the 59.8 that was printed in January. Perhaps a sign, Chris, that the data for now seems to be holding up, but there may be a few warning signs for coming data in the next couple of weeks, and perhaps even from March, we may start to see more impacts from coronavirus.
Indeed, yeah, that does substantiate that assertion that it's the supply chain concerns that are hitting manufacturing. Many companies okay for now, but they're worried about those future supplies and how it's going to dent their output in coming months. So lots to look out for. So we're not out of the woods yet with this. It's encouragingly strong numbers. The ECB in particular will be cheered by the fact that there seems to be a groundswell of rising domestic demand. I mean, we're still weak. I mean, the overall headline PMI is only commensurate with around just 0.2% Eurozone GDP at best. So very, very subdued growth. We've also got only weak employment growth. It's still the softest jobs creation trend we've seen for 5 years in Europe. So, as you know, there's a mountain to climb still before you're up to sort of potential normal trend rate growth. But the ECB will be cheered that there is this resilience from domestic demand helping support the Eurozone economy in the face of these export-led weaknesses linked to the virus.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.